All of you here today. We'll just allow a couple of minutes for everybody to settle down. We have our speaker here with us today. Her name is Namrata. I can see the number of participants increasing. Today, what we are going to discuss about is genuinely if MSMEs are viable enough, then why do they still struggle to get access to credit? So that's and I know it's a very interesting topic. Before the session also we had so many members reach out saying, will it start at 4? How do we go about registering? So I'm so glad to see all of you here today. We'll give it a couple of minutes, and thank you, great initiative. Thank you so much. Um, So before we get started, I'll briefly also tell you a little about our speaker today. So Namrata Rao is the Vice President at Jocata. Jocata is a Hyderabad-based fintech that works with leading Indian and global banks, NBFCs, and fintechs as well. And she kind of focuses on strategies, special initiatives, and also leverages AI, the buzzword now, to drive growth through data insights for financial institutions and beyond as well. So, borrowers, including small businesses too. And she's part of the core group behind their SIDBI initiative called Jokata Sampoon, which is India's first MSME economic activity. Um, I think what I'd like to say is that a lot of businesses today um, try to get access to credit, but what happens is that they don't know what the other side of the institutions are really seeing. And so it'll be so nice to actually upfront see what is it that is getting revealed about your business even without you knowing. So it's a fairly niche topic, and I see that people have joined in. Very encouraging to see that so many of you all have joined in from so many cities across the country. We will start the session at sharp 4:05. But in the meanwhile, if you want to use the chat box, keep any questions parked for the speaker, anything of that sort, or tell us a little about your business, please go ahead and do so. It'll be a nice room to interact. But for the newcomers here, I just wanted to say that this is we're doing this as a part of GlobalLinker Growth Talks. So where we invite a speaker from another organization that can add value to the SMEs on of GlobalLinker. GlobalLinker has about 4 lakh plus SMEs across the world engaging with each other. In fact, using our GlobalLinker marketplace as well, which connects buyers and sellers in the B2B space. So, this series is specially dedicated as an educational or information based series, such that MSMEs have a value added experience gained from all the knowledge that is being shared by thought leaders and industry experts. So, I'm quickly going to reintroduce our speaker. Okay, I can see these are experts. Yes, Mr. Advait, I'm a merchant trader and looking forward to enter the title of the merchant exporter this year. That's great to know. Wishing you all the very best. We hope we can be part of this meaningful journey with you. Um, I'm going to quickly just tell you a little about, let's say, Namrata, our speaker today. Namrata Rao is the vice president at Jocata, which is basically a Hyderabad based fintech. What we're going to discuss today is fairly evolved. So let's say, what does a GST return say about about your business that a balance sheet maybe doesn't, right? So we'd really like to hear on what really is there in it. Can you see, let's say, your growth trajectory? Can you see your turnover trends, or can you see your buyer supply concentration? We'll also invite Namrata to kind of walk us through any signals that a business owner should be reading in their own returns. So, can you actually, in your own returns, see what are the signals that will help you get the right kind of credit. And on the other side, how does the lender also read those signals? And of course, we'll also go on to exploring what does a traditional bureau or credit data still fit in? Is it being replaced or is it going to still be there? I don't know. Let's see what she says. Is it going away? Is it staying? Let's see. You should stay tuned till the end of the session to know that. Um, of course, we'll also have today we also have with us a lot of exporters in the audience and larger businesses, not just MSMEs. So does it mean any change? Does it mean that it's interpreted differently, the GST? And finally, for someone who really wants to become credit ready, what is the first practical step? We'll go on to discussing all of this. So stay tuned. If you have any questions, please put them in the chat box. And over to you, Namrita. Now I think we're in there now in the heat of the moment. So I'd like to invite you to get started, share your insights with the audience today.
Thanks so much, Malvika. I mean, thanks for that intro. And I think your energy is kind of infectious. I hope I can keep up with that energy. Uh,
Totally.
so, firstly, I mean, of course, and thank you to GlobalLinker. I think you guys are doing something really important for small businesses because businesses finally want opportunity for more business and, of course, to build their entire value chain. So, I think that's great. And I think these kind of information sessions really help because the more we also engage with MSMEs, we realize that there's a lot of gaps, small gaps, in an understanding of some of these things, right? Whether it is credit, what does the institution look at? If I'm an exporting entity, given the current global environment, does what changes for me? So I think those are great, I mean, important questions, and it's wonderful that you all are supporting small businesses with that. So let me just to start with give a brief background the of Jocata so that you understand the context in which I'm going to be speaking about some of the things. Jocata is, like Malvika mentioned, a fintech. We've been working with banks and NBFCs. We started in 2010, and since then, we've done a lot of work. It's our underlying technology platform that financial institutions use to assess loans. Your individual loans, small business loans, corporate loans. So the entire stack is ours at the back for very large and marquee banks and NBFCs. So when in the course of what we were doing with them, we realized that data has increasingly became the center point for a lot of decisions. And it started slowly. It started with identity verification. When it became digital and India Stack came in, and since then it slowly has grown, and increasingly banks and NBFCs are trying to digitize complete loan processes, because a loan for anyone should not take a long time. You're in need of that credit for your business. You need it. You need working capital. So keeping small businesses waiting is not something that even the lenders want to do, but this is something that we've been trying to help them solve for using data insights and, of course, now AI, so that more loans can get processed faster and better. So with that little background, I'll just get into our topic itself today. GST, when it came in 2017-18, it was a big struggle. I'm sure if your business has been around for a while, you'll remember that time, where it was understanding a new system, learning how to file. Since then, that data has kind of stabilized, and the filing process is also something that now small businesses are comfortable with. Uh, I mean, I'm assuming that all of you all, either you all are filing GST on your own, or you have your your finance team or your CAs who do that for you, right? But the GST data itself, and I want to talk about that data, that there are about 8 crore small businesses, and they are all so different that lenders find it difficult to assess one business and the other. And traditionally it was a, a credit manager who would talk to you, would engage with you, and understand your business, try and crunch those numbers, and decide whether that loan should be given to you. But because we are moving to this digitization, and as I said, speed is something that the banks wanted to achieve. They said, what can GST data now enable them to see, right? So GST data, when it kind of came in, of course, it's the entire sales and the purchase ledger. It's your own data, right? You file this, or someone files it on your behalf every month. But it's entire your ledger. And what it does, beyond just saying that, oh, this is your total sales, or this is your total, your purchases, there is a lot more packed in there. And that's what Jocata has kind of helped financial institutions look at. We generate using 2 years of your past filing data. We fetch that with your consent. This is processed, analyzed, and scored, and shared with the financial institution. So there is a single score as an outcome of this data, and that score has underlying interpretation, which I will walk you through. So what is essentially visible from GST data? So from GST data, because we are looking at 2 years, you can see the monthly sales, right? So there's a sales trend visible, because your most typically businesses are seasonal. So how you do in one season versus another would be different, and how you do as compared to the previous month, right? So there are two kind of trends that are hidden there, right, in your sales data. Similarly, your purchases also have a movement. There is a variance between your sales and your purchases, because different businesses have different purchase behavior, right? So these are the two kind of the broad trends that are seen. What are the other things that are visible in the data? The other thing that is visible in GST is a look through to your counterparties. That means, let's say, Namrata Enterprises, is a borrower seeking credit from a financial institution, and I am working with, let's say, Malavika. She's my buyer, right? Through my GST consent, to some extent, the financial institution is able to look at Malavika's GST filing behavior, and some signals are derived from that. So let's say Namrata and Malavika have been doing business for a good 2-3 years. There is a strong flow of invoices between us. We frequently we transact, and that is visible in GST. Let's say Malavika files her GST on time, in full, she's compliant. That's another comfort that the financial institution derives. It says that Namrata, let's say, is doing well, but she's also working with very strong buyers who are compliant. And because they are compliant and they are filing on time, it's likely that they will also honor their payments to Namrata. So this is another sort of a look through comfort that the financial institutions take from there. They look at the segments. Let's say Namrata Enterprise, I'm just using myself as an example, but let's say I am a B2B business. I have largely been a stable B2B business, and I have some exports, let's say. So that is visible on GST. And let's say I start changing my mix and I introduce a B2C, sales component into it. And let's say my business is changing, I'm expanding, and I have introduced a new segment. Now, this shift is also something that lenders look at. They look at the stability of your business in terms of your business segments as well. Then finally, of course, all of this kind of comes together, and all these little signals that are parts of the story of yours is what goes into the final decisioning, and one of the pieces into the final decisioning. I know Malavika mentioned whether credit bureau is still going to be around, and I'll address that question maybe at the end. I think some of you already know the answer to that, but I'll come to that at the end. So with this kind of background, I think what I'll do now is take an actual report that we have generated and show and just walk you through this is of an actual business. It's all the data and everything has been masked, but just to show you as an example of what that data looks like and what are the signals that are there within it. Feel free at any point to ask questions in the chat. We also have our team members who can answer those questions, and we'll also have a Q&A at the end of the session. I'm just going to be sharing my screen. Is my screen visible and up for everyone?
It is, Namrata.
Great. Okay. So this is a business reflection report that we generate under MSME Sathi. I'll just take you through this case. I'm going to, of course, zoom into this entity. Now, this is a private limited company that's based out of Tamil Nadu. It's a regular filer. Regular as in it's a regular monthly filer. In the case of a QRMP or a quarterly filer, that would be, that is filing quarterly, that would appear here. So the overall sales of this entity is around 70 crores, and the purchases are around 66 crores. And the J1 that you see at the top, we'll come back to this, but the J1 is a performance score that is generated over this GST data. And I'll come back after taking you through the report. I'll come back to this at the end. So this particular entity that is based out of Tamil Nadu has a sales activity in 4 states. Now, again, this is all your data. So try to look at it from how you would look at your own business. Now, this is what is available and visible, right, to a financial institution. And this is also shared with MSMEs themselves so that they understand their data. So the sales activity that is there in the 4 states, Tamil Nadu has the highest sales out of them with 27 crores contribution from Tamil Nadu. Now, this is a typical behavior that is there with small businesses. Your intra-state sales, contribute a fair amount to your business, and the 4 other highlighted states are where the sales activity is also present. The sales, now interestingly for this entity, the year on year growth has been very strong with 68% turnover growth in the previous trailing 12 months. Now, because this is, and this is something I want to highlight, when you give your GST consent to a financial institution, or let's say you're fetching your own report, it goes back, the data goes back to your last filing date, the last data that is available, to 2 years back. So this particular, for this particular entity, it probably came in April, and the data fetched back to the last available trailing 12 months. So that's why this is not a financial year, and it's important distinction because in a, when you give your financials, submit your financials, it may be very dated, and there is a lot of gap between that filing and your how your business may have actually started doing much better. So the GST data gives a more recent picture of how your business is doing, and that's why increasingly, banks and NBFCs are looking at GST data. For very large ticket sizes, they look at financials as well. But this is very powerful because this is your most recent available business data, official data that is accessible to the lenders. Then moving to the customer count itself. So obviously this sales of 70 crores is contributed by, a number of counterparties or buyers. And in this case, 157 customers contributed to this 70 crores. In the previous period, it was 141. So this particular business has added 16 buyers, but those buyers have been very strong contributors to its sales. Then, as I mentioned, the segment-wise sales are available on GST. So you have your B2B, you have your B2C. B2C is split into B2CL and B2CS, which is large and small. Your exports are also visible here because you file that as exports. And any nil or exempt category sales are also filed. So here again, this is a trend. The split of the 70 crores that a lender would look at, or you would look at. Then where what are these sales of from a product or a service perspective? So in GST, you might be familiar, there is an HSN code or an SAC code, which is the harmonized system nomenclature or your service activity code. So based on that, and now it has become mandatory to file, above 5 crores, you have to file at a 6-digit level, and we also get 8 digits of HSN, where a lender is able to see that this is a very specific, sector that you're working in, and almost a specific product that you are dealing with. So in this particular entity's case, the top three are largely the 84, 73, and 72 are largely where his sales are originating from, plus 85 as well, right? The chapter codes. Now, I want to highlight one thing that when a business looks at its report, some interesting things have come out. We found that some of them had a misfiling of an HSN. Now, it may seem like a small thing. Maybe either the finance team or the CA had misfiled for whatever reason, and the particular business was into footwear, and the HSN that showed up in their GST filing was actually of iron and steel. So when there was a credit application and assessment, the lender's natural question is, this is a footwear business, why is it into iron and steel? But it was a case of misfiling of GST data. So these kind of things come out when you start looking at this data, yourself in this manner broken down for you. The other thing that a lender looks at, and even a business should be conscious of, is your business very dependent on a few buyers? Because from a risk perspective, it is a business concentration risk. Let's say you are dealing with a very large buyer, and let's say over 30%, 40% of your sales are coming from it. It could be that if, let's say, tomorrow that buyer moves out, and then the business could be at risk, because a big chunk of the sales are gone. So a concentration risk is something that lenders are conscious of and they look at. Now in this particular case, in this entity case, less than 20% sales is coming from the top 5 customers, which is a good sign. And as you saw, the total buyers that he has 150. So it's a distributed sales relationships that he has across all of those customers. From the GST data, of course, all of it is visible at an invoice level for for you to see, as well as for the lenders to see. But these are aggregated views that just highlight the key points that are there. The other thing to sort of understand from GST data is your sales will come from, typically there will be your loyal customers, your existing customers. In this case, the top 5 customers, the sales by growth percentage, they are strong sales coming from those top 5 existing customers. And then there are decliners. Now those decliners are also important to track. When we were doing this particular report for a very large FMCG firm in Maharashtra, we found that the decliners, they had missed some of the decliners because they were looking at the overall numbers. So they thought more or less the sales has been growing as it is expected. They had done some consolidation of the buyers, so they thought that okay, maybe it's not a a big gap. But they found that the opportunity loss of not focusing on certain buyers was high, and this sort of brought it out for them that okay, my decliners are quite a lot as well. Then the new customers that have come in, the top 5 of these is what we have rendered over here, and the total sales that have come in from them. And similarly for a non-contributing customers, that means that they were with this business in the previous year, and in this particular year they did not do as much business with them. So who are they? What, how much of that opportunity loss, like I was mentioning, is present. Then the same thing that you saw on the sales side is also flipped on the purchases side. So on the purchases side, of course, you'll see your B2B purchases, your imports, and any other categories that are visible and broken down, in this review, as well as your top 5 suppliers that are there and their contribution to the supply chain. This is the the sales and purchases view on a month on month level. So lenders also look at this to see whether there are big sort of fluxes in your sales and purchases, because they also want to see whether your business is steadily having sales, because it might impact your repayment of the loan if you get the credit. So this is also something that they look at. But typically there are some cycles that are there in the depending on the type of business, so that also is considered. In this particular case, this of course, I'll go back to that score that we looked at, but this entity has been filing his GST and very compliant GSTR1 as well as 3D every month. It has been on time. There have been no delays or no filing, which is a great, sign for them, right? Then there's of course your input tax credit, your reported versus claim, that can also be tracked. Now I'll go back to the score that we had generated, and I'll go all the way back. Now this entity, with everything that we saw, very strong sales growth, there's not a lot of customer concentration, very distributed business, very compliant in terms of filing his own GST. His counterparties are also filing their GST on time. So all of these signals together, contribute to this business performance score, and that's why it's a J1, which is a very low risk and a very good performance, strong performance of this business that is visible here. I won't go into another report, but just to contrast it, I'll just show you another business. This is now into a different space, but it's also based in Tamil Nadu, and we intentionally picked a case that was in the same state. They're like very different. This particular entity is doing 20 crore turnover business, but its sales growth, its turnover growth is only is sub 4%, right? It is located in Tamil Nadu, but its sales activity is limited only in those 3 states. It's not very highly acutely concentrated, but it is concentrated. Its customer count has dropped from the previous period to now, with only 17 customers contributing to this 20 crores compared to the previous period when they were 28. And of course it's a B2B entity. It does not have any other sales segment, and it's into your it's an auto ancillary, it's into vehicles, etc. And so I just wanted to show you the contrast between the first report that you saw and the second, with the entity that is located in the same state. And the nature of the business is very different, but the signals, and I want to highlight one more thing. If you see, for this particular business, its top 5 existing customers, they are not filing. There is delay in their GST filing, which is also visible. So the little exclamation marks that you see show that there is a delay in the filing of your counterparty, right? So there are all these signals that are kind of embedded in the GST data itself, you know. And I mean, from purchases, etc., it's similar, but his own GST filing, this particular entity's own GST filing, there are a lot of delays across time. So if you see 6 months out of the 12-month period, has seen delays. So these are all, kind of the signals that come in from your GST data itself. There is actually a lot more. This is a distilled version of the report. What we also enable is we allow, using AI, an interactive kind of experience to kind of chat with your report, to see, what are the hidden trends, what are the insights for you, what can you work on, how can you compare yourself with peer businesses, that may be, like to businesses that are operating in Tamil Nadu, or maybe in, an auto ancillary space, or it could be another space, or it could be to exporting entities. Comparing your business on an anonymized level with another business, so that you can see, what are the areas of improvement for you, what can you look at directly. Of course, is a GST filing is the most straightforward, but there are a lot of other things that start coming out when you look at the report and kind of digest it. So now I think I'll stop sharing, and to complete that piece, and go back to the credit bureau question. So typically, how lenders look at it is that for them, each piece of data tells a different story. If you have taken credit before, and that credit bureau data is visible, if you are a sole prop, it could be at a consumer bureau level. If you're a larger business, it may be a commercial bureau, but your past credit behavior is also looked at. The GST part is seen as the business insight or the business information. So there is credit information, your past credit information. There is your business information. Financials is an additional piece, but depending on the loan ticket sizes, then lenders choose whether they want to only take two pieces of data, whether they want to take a third piece of data or not, and so on. So with all of this, with the particular report that you saw is today, it's generated in less than 2 minutes, and you can fetch that report for yourself and look at it. But the lender also gets this report as instantaneously. It is fed into our rule engine. Those rules are run for all the different aspects of your business to assess your application, and then there is a decision that the lender will make based on their credit policy. So I think it's a long kind of flow that I have said, but I'm sure there are a lot of questions going on in everyone's mind. I think we should get into questions, and just maybe I could go back to the report if anyone wants to, but it'll be good, I think, to get questions now.
Sure. So, whoa, Namrata, it's like you showed us J1 versus J5, and I think it's very critical for every business owner to know it and see it for themselves. When you were showing it on the screen, I could like visualize and see what will ours look like, how will it score. So I think I'm sure a lot of our members today would also want to get it. I've just in the chat box put a WhatsApp group link. If you do want to get your report, um, absolutely within 2 minutes, actually, after you've given consent, but we'll go through the process. Um, please join the WhatsApp group and we'll connect with you offline to take it ahead. Couple of things now before we get into questions. Do you want to kind of also answer the first question that I was referring to? Let's say today, in today's times, many MSMEs are genuinely viable, right, to kind of receive credit, but yet people struggle to get credit. And why is that so?
So for some of the reasons that I mentioned, that it's genuinely hard for the lenders to understand, because the differences between one business and the other are huge. And sometimes a lot of these decisions unfortunately still are taken the traditional way, with human intervention, and with the credit manager working through files. And we've seen that sometimes it can take 45 days, it can take more. Your application is just stuck because there's someone physically checking, and reconciling things, which is just laborious. So but now with digital, it's getting better. Now your GST data as well as your banking data can get triangulated in minutes, instead of taking, let's say, hours and days, with somebody manually checking, oh, so much sales has come, is that collection reflected in the banking data, and so on. So all of those layers are there. The other thing, and now the global both the global macro environment as well as things like climate are adding to business risk. So now there are other dimensions that lenders are also getting conscious of. In fact, one of the things that we've launched is a climate risk score for small businesses, because there are So the lender wants comfort that he will get his repayment, while the small businesses, they want the credit, of course. So how can you make these two meet faster? Using all of this data is what the whole effort from all the fintechs and everyone out there is.
Absolutely, absolutely. And like I told you, GlobalLinker has about 4 lakh plus businesses on the platform, but we have also a large chunk of members who are exporters. So today, a lot of exporters have joined in. Do you think there's any difference when it gets evaluated, let's say, by a larger business or by an exporter for that matter?
So there is, for larger ticket sizes and all, now increasingly lenders are, in fact, when the tariffs hit last year, and when there was so much uncertainty, a lot of lenders approached us to say that, can you do a portfolio assessment? Can you look at our exporters?
So,
How do we look at
sorry
that?
to cut you there, but you said a lot of lenders come and ask you. So why don't you tell the audience, like, what kind of lenders do you work with?
Sure. So we work with both banks, NBFCs, and in banks we work with your PSUs as well as your private institutions, your global banks as well. They, and largely all of them, the main question was, what is the exposure to US market? And the second was, which sectors are they into? Is there any pattern of risk? And there were some of the financial institutions that were taking, a call to, let's say, temporarily reduce lending to a sector, because there was just so much uncertainty that happened last, even this year actually. So they were all trying to understand what are the different ways to understand exporting businesses and still lend, right? Because finally the institutions also want to lend, but they want visibility. So they wanted to, like I was saying, they want to understand where are the exporters selling to, what is your exposure like? Is there an industry level, concern happening? Which is why actually the Sampurna index that we built, that is what is trying to do at a aggregated level. Because the lender wants to know, are the exporters, let's say, from textiles in Tirupur versus your Ludhiana belt versus, let's say, Gujarat, is there a difference, you know between the risk that is emerging for them?
Sure, sure, totally. So I think we'll also kind of invite some questions now from the audience. I do see one, it's a little off topic. I'm not sure if you'd like to take that on or take it offline, but I'll just kind of go ahead and read it, or you could also read it. But it says, um, I don't wish to take a loan for my business, but relevant to GST and still going off topic, there are a lot of government linked loan schemes that we keep seeing every now and then, let's say on news, on LinkedIn, but which are granted to all those who have an MSME Udyam certificate. Are they actually legitimately granted with easy and minimal paperwork to attain those loans in the real market conditions? Would you want to take that on?
I can answer this broadly, because
Yeah,
we don't do the scheme based loans,
sure.
but they are given. In fact, there is a lot of effort, from government, as well as where the schemes are run with the commercial banks, through
Hmm.
them,
Hmm.
right?
Hmm.
Because Udyam, when it came in, the effort was to sort of formalize businesses, give them an identity that can be connected, and then, a priority sector loan can be given to them. So there is that effort, but yes, there are breaks in it, if I can put it that way. So intent is there, the last mile, sometimes, that loans, there are challenges with certain schemes and all, but there are a lot of schemes that the government has also come up with now, and it's trying very hard to implement them on the last mile.
Yeah, I think, and to simply put it, Mr. Menon, Global Inca is also partnered with a lot of government bodies, Telangana state government. There are various other trade bodies as well that come under the government bucket. But what I can tell you is that, to answer your question simply, yes, they're legitimate for sure. The loans are legitimate. Is it easy and minimal paperwork? I don't think so. Now, and the reason I say I don't think so is because there are so many businesses wanting to apply for that loan that it's a little difficult at their end also to kind of process it. But I think now with all of the digital awareness, with tech coming in, even the government bodies, for example, the government of Telangana actually uses GlobalLinker to run awards for MSMEs. I noticed in the starting you said you wanted to be the merchant trader of the year, so maybe you could look at awards like that. So I think like Namrata said, the intent is there. It's very high. It's about how you go through that process and how you actually fate also depends a lot on that. So he has another question. I'm going to again read it, but I think again off topic. But in case there are any other questions, you all can send it out. Um, so he says most of the above mentioned schemes do have an underlying disclaimer that the government linked loans will be provided only to LLP, partnership, and private limited entities. Why don't they serve sole proprietorship? Are there any government links schemes that serve sole proprietary businesses? I
So I
think
think
that's
there might be a few, and I think for soy props and all, the push has been more on the startup end because there are a lot of funds and all that are being set up there. So,
right.
for someone who's just set up, like a recent business, so there's a lot of effort there. But for sole props, of course, you could be a sole prop and, not be a startup. I mean, it's that term startup is, that way used in different contexts, but there are some schemes that are there only for sole props as well, but some of them might be for very specific types of businesses. So because sole prop is also a very wide category, right? Within sole props there will be certain schemes that will be there, let's say for women businesses. There may be something only for, let's say, under a specific category like hospitality, travel, all of that. So they may not be bucketed as sole prop. You may find them as a under a business type. You know.
Sure, sure. So, Namrata, I want to tell you, while the questions are less limited, I think maybe because people have understood, but I can see already a lot of members joining the WhatsApp group that they would want their report. So we'll pursue that one after the session. Anything else that you'd like to add for the members and still keep it open for questions to come in?
So, I mean, I'll just, I think maybe take the question, or rather, what Mr. Advait said, right? That he wouldn't want to apply for a loan.
Yeah,
So, all of this is not to put off, small businesses and for them to feel that, oh, it's such a complicated, difficult task. In
mm,
fact, I feel it has become, far simpler.
mm,
It has become digital. Yes, it means your documentation and your information and all of that, you should have it structured. You should be in a position to give your consent digitally. Every things are in place, but now digital is enabling credit. Too credit worthy is what I would put it as. So I hope the takeaway from the session is not that, oh, loans are now so difficult, they're seeing so many things and it's too much for me, but rather you are more likely to get credit now, with different pieces of information. If you have credit information, or if you don't, right? Even if you don't have a credit history, let's say, today banks have a way of assessing a small businesses, which before they found it difficult to. So that way credit inclusion has really improved. So I just want to leave that thought with whoever is gathered here, that it is now more possible for you to get credit than it was before.
absolutely. And I think it's no longer a taboo, right? It's sometimes very good to, let's say, have a loan just in terms of all the returns that you get with that as well. So, Ms. Adat, you should definitely explore further on that. It's not to say that it's always a liability, it can be an asset as well. Um, Anything else? Any closing comments? Anybody else who wants to ask any questions, or we can wrap up? So, Namrata, do you want to kind of just briefly talk about the number of SMEs that you, let's say, help via this initiative already? Um, or
Sure.
how do you go about, and how many people actually find value in it so that there is meaning to that?
So actually, Vanika, there are two parts to what we do. Like I was saying, what we do for the lenders. So for the lenders, over time we have helped them assess over 20 lakh small businesses of all sizes. So right from your sole props to your larger, corporates or private limited entities that may be there. And directly under our MSME Sathi umbrella, also where our direct credit goes to. Also, we have a 2 lakh strong base that we reach out to, and who are taking the report and finding it useful. Because this is a new area for small businesses. Like people are now comfortable with credit bureau. They understand. They know that they can see the score. You will get it on every app. But this is new, so we handhold a lot. We get a lot of questions. It is, even though this is all digital and available, we do a lot of almost consulting to help businesses understand the report itself. So I think that is something that will take time, for MSMEs to get around to understanding that, GST also can do a lot for me.
Absolutely. Yeah, that's totally the idea of today's session as well. Okay, so I think we can close it here. We'll, in case there are any questions post the session, anybody who would want to personally get in touch with you, I will also connect them. I see that a couple of business owners are now interacting on their contact details. Please feel free to use it as a networking platform. But yeah, so thank you, Namrata, for joining in. Thank you for sharing your valuable insights. I'm sure in the minds of so many business owners, they could see their own, they could visualize their own business while you were showing both the different reports and thinking about, okay, I'm not going to delay filing my returns. But since it's a sensitive topic, people don't like to kind of reveal a lot about their business in public. So I think we will not entertain further questions as well. So thank you so much for joining in. Thank you, Namrata. Thank you, everybody, for the audience for joining in. I hope you found meaning and value to the session.